So if we know that if we know that the trends are up, midterm trend is up, long-term trend is up, then we know that the market makers themselves are going to have more buy orders close to the market than they have sell orders. So that means that they're probably going to push the market up. It really is that simple. It's the basic mechanics of the way the market works. And by putting ourselves in the way of that, by knowing that the long-term trend is up, that the midterm trend is up. How do we know that the long-term trend is up and the midterm trend is up? Look at this. Higher lows. And you can see here, we're getting close, but not quite. We're still putting in higher lows. We're putting in higher highs. Midterm trend is up. So if we then go to a daily chart, how do we know that we're in an uptrend? Well, again, we just use our eyeballs. We have higher lows. We have higher highs. The market is in a long-term trend up. And because it's in a long-term trend up, that means we have more buy orders than sell orders. And if we have more buy orders than sell orders, that means that the market participants, when they push the market down, they're doing it in order to take the market up. Hopefully, I've made that point. And it is a little bit backwards for most people. Believe me, I understand how it may be difficult for you to picture, but just go back over. I'll put the recording up. You'll have access to it. Or if you've got this on a CD, rewind the CD. But look at the examples again. Because if you understand the reasoning behind the move, then you have more confidence. Okay, and I don't care what the system is or what trading tactic you're using. If you have a way to understand the bias, you have more confidence, which means there's less stress in trading, and by less stress, you wind up making more money. Okay? So, hopefully that filled in some holes for you. Hopefully now you've got a better idea about what's going on in the marketplace and some of these underlying reasons why. Now, again, I'll expand on this through the weekly wraps and all the stuff that's on the member site. Don't think that you have to cram all this in your brain at once. Believe me, I didn't learn this in a day, and you shouldn't expect to either. Remember, you've got to cut yourself some slack, please. Okay, there's a lot of stuff in this 3-part series. There's a lot of stuff to learn. In the course, there's a lot of stuff to learn. Cut yourself some slack. Focus on the fundamentals, and then let yourself take some time. And that's my little segue into. We're going to go back to PowerPoint now. That wasn't as smooth as I had hoped. Okay, so here's what most people want. Okay, now this actually is a system. Again, I don't like giving out systems, but this is a system that I've been testing for a while. It's not ready to release. I don't even know if I am going to release it yet. But as you can see, it's very profitable, and I've tweaked it, and I've tried to poke holes in it, and it just performs very well. And again, it's based on the fundamentals and the basic way the market works. Okay, this isn't about MACDs and squiggly lines, but this is how most traders want their equity curve to look. And I was on the phone with one of the members today, and I was talking about this, and hopefully you're on the call. And I apologize, I don't remember your name, but we were talking about the equity curve. And most traders wish that their equity curve looked like this. And as you can see, this is for a year. So basically, starting at 0, this particular system came out, and it's actually about $67,000. Trading one full lot in the marketplace. That's a phenomenal rate of return, believe me. There are a few areas in here where you can see there are flat spots. Don't get me wrong, this thing isn't all glory.